Hey everyone, we are back with another video going to be looking at Home Depot today. They are releasing their earnings pretty soon, so I want to go over their overall financials, see what's up with that. So make sure to subscribe and let's get right into it. All right. So let's get right into it with Home Depot. So starting off with the snapshot, we got cost of capital at a modest 7.8%, not bad. Target price looks reasonable. Long-term growth rate 4.4%. Now, one thing to remember is I am going to give the full point for that because Home Depot is a fairly old, very well established company. So a growth rate like this is pretty solid. Um, but yeah, they're very old. I don't know the best word for it. A matured company. There you go. So let's get right into it. Sales, not going to be looking at quarters probably at all for this one. Sales, I mean, honestly, they've been down since 23. Oh, they actually have 2024 data now. But before that, consistent. Excuse me, but it looks like they're consistent other than down in 23. I think I'm going to go with the. Let's see, apparently they're estimated to be down again, which isn't great. I'm going to give the 0.5 there because I want to. Operating income is basically the same thing, and then net income again is basically the same thing. So I think I'm just going to go 0.5s across the board here. Sometimes you can see some differences in their operating income where they cut enough costs to still increase compared to their sales, but not here. EPS is again going to tell you the exact same thing. I'm doing 0.5s across the board only because they have seen consistent growth and just in the past year have dipped. So if this estimate is correct and they could be declining in sales, that is something to consider more of. But at this point, we don't really know yet. So total shares have been steadily decreasing, which is fantastic. So that little bit brings it back for the income statement. Let's see the balance sheet. That'll most likely look pretty solid. Cash compared to short term is okay. Not the greatest. They have a lot of short term debt and a ton of long term debt. Now, again, with a very established, mature company like this, it's a little bit different, but at the end of the day, not really, because they still have debt is debt. So, and they still have a lot of it. But I mean, their cash compared to their short term is okay. So I'll do the credit there. Assets are consistently increasing, which is good. Total debt is not coverable by cash. Oh, sorry, that's the short term. Short term is coverable by cash, but there is a lot of short term debt too. That 2.4 billion is a little bit much. And then in terms of the overall debt, I'm doing the zero there because they have a ton, especially in the last 2 years. They took on a decent amount more. And then retained earnings will most likely be good, which they are very, very positive and increasing. I think that, yeah, that's in millions. So if that's $83 billion of retained earnings, that's kind of crazy. But I guess it is, yes. So cash flow statement, let's see what's going on there. Operating is, these are in, just so you're aware, these are in billions, as I'm sure it will tell me somewhere. All values in billions of USD. That's why the numbers are so small. But looking like operating cash flow is positive and has seen a little bit of a dip here, but other than that, was growing. Yeah, so it looks like they're going to bring it back in the cash flows here. Net investing is negative, which is good. Financing was very largely negative and apparently is estimated to be positive, but I am not going to go off of that. And then free cash flow is excellent. So bringing it back in the cash flow statement there, let's see the use of cash. They should be paying off a lot of debt. You can see already the share repurchases. They are very, very large. So share repurchases, they issue very little, at least compared to what they repurchase. And then in terms of debt, they are issuing a significant amount more than they're repaying. So 0 for that one, 1 for that one. And I think that's about it. Let's check out the ratios, see how we're looking here. So, okay, net margin is solid. It looks consistent. It's actually always been around 9 or 10 for the past 5 years or so. So I'm going to go with the credit here because they've seen sales growth and it's stable. At least ROA, ROE is really good. I don't even know how to read the 1,100 return on equity, but in terms of them being positive and stable, it's pretty good. So I'm just going to roll with it and say that that's solid. And then long-term debt to total equity. Let's see what that looks like. And it should be decreasing ideally, but they've taken on a lot of debt in the past couple of years, so it really isn't. So that is not the greatest there. So overall, for Home Depot, we have 17 out of 22, final score 79. Let's put that in here, HD 79. So that is it for them. Fairly solid score, kind of a little bit above average, middle of the, well, for everything I've done, it's a little bit above average, but pretty good. So if you enjoyed, make sure to subscribe. That's it for today, and I'll see you next time.